Yep.
All right, welcome back to another Stock Talk live stream. It is Jesse and Bacon here. Bacon. I had been putting you as a special guest in the description of the live streams, and I changed it today to just regular guest. So I was like, he's been on like so many times. I think you're still special, but you're now just a regular guest.
Side character, reoccurring character. I forget what the distinction was.
Yeah.
Yeah.
So thank you for being here again.
Oh, thanks for having me.
Yeah, it's nice to have somebody else on these, so I'm not just talking to myself.
Yep.
Yeah. So for those watching, I'm going through a thunderstorm right now. My dogs are freaking out. So this one might be a little entertaining in different ways. I'm trying to console my puppy because he's pretty scared of the thunder and the rain, unfortunately, but he'll be okay. But hopefully, I do not lose internet connectivity and this goes somewhat smooth. So, yeah. I guess getting started off, man. What's been going on in the market? We got like 3M came to a settlement agreement, right, with the earplugs, and I think that ended up being about like what 5.5 billion, and I want to say they have another settlement for the forever chemicals at like 10 billion or something like that. So I think they've got about 15 billion or so in settlements right now that they're going to be paying off over a longer period of time. I know that was something that caught my eye the last couple of days, and of course, it happened right after I sold my 3M position at break even. I was like raising cash for stuff, and I was like, 3M, like, it's all right, but I don't like. It's not like I don't feel like I have to own it. So yeah, I like sold it at like 99 around break even, and then it goes up to whatever it's at now. But
How did it do today? Like, do you know, or?
what is it
Sorry,
at?
I was busy today, so I wasn't able to really look at the market.
I think it's up to like, is it 106 or I don't know. It's 106 or 108, something like that. So yeah, 105.
Okay. Yeah, all right.
So it jumped like, it didn't jump a ton. Like it jumped a little bit on the news. Like what was it, 4 or 5% on the news, and it had a nice little follow-up day.
Yeah.
But nothing crazy.
I do only have like one niche value add if you wanted me to talk about this, but we don't have to because it's
Go for it.
Oh,
You
all
can
right.
always
So
talk about stuff.
yeah, anecdotally, it was funny because like one of my finance professors, his background was actually like the tax implications of these types of settlements. And the curious thing is, generally speaking, companies are able to, at least in America, they're able to use legal settlements and have like a tax deduction with them. Now it depends on the legal case though. So like if it's like any sort of like harassment or that type of misconduct, like the demonetized misconduct,
Yeah.
based off of what I've heard, like those you don't get any tax deductions. And what the exact amounts are, I don't know. Not an expert in that, but just food for thought as far as like people that really like their numbers and want to be as accurate as possible with all their decimal points.
Interesting. Yeah, it makes sense. Like, yeah, if you're, oh man, my dog, my poor dog. It's okay, buddy. It's okay. Um, yeah, no, it makes sense. Like, if you're obviously paying out a ton from a lawsuit, that you might get some tax breaks from that. But yeah, I never really like thought of it before dug into it. Like, how do you know by any chance how much they might be saving on their tax bills from
That I'm not
that type
sure.
of
I
lawsuit
I can't
or
remember what the
settlement?
percentage was, but like there was some sort of like general rule of thumb that that my professor like noticed. Again, I can't remember off the top of my head though, sadly.
Okay.
Yeah, I don't think I took notes on that one either, which is a shame because like it was one of those like rare moments where he's like not talking about lecture topics and it's like, oh yeah, like this is happening in the news and like this is my background. Like I did doctoral or master's level like paper on this.
That's pretty cool.
Yeah,
Oh man.
yeah,
So, yeah, so the company that we were going to discuss today, and I've
yes,
talked to you a little bit about it. I've talked to some people here and there about it, and
yep.
it's a very interesting one. It's Shutterstock. So, for those, oh my gosh, my dog, buddy, come here. Okay, do you want to make an appearance? All right,
There's the real value add.
there you go. This is the nervous puppy. So, all right, come on.
Stone cold
You're good.
doggos.
But we'll see my retention go through the roof now because the dog was
Yeah.
on the screen. So yeah, Shutterstock. For those that might not be familiar, competition. Well, something kind of adjacent to them would be like Getty Images. Shutterstock is like stock photography that you can like purchase, download, and use in like marketing or designs and stuff like that. So they dog. So they typically have like people that are partnered with them, contracted with them, and they'll go and do photography. And they've basically compiled this huge library of images over the last geez, has it been 10, 15 years now? I don't know. It's been a while. So that's mostly what people know them for. They have some adjacent offerings, and so they have like images, video, music. They've built some tool sets here and there to help creative I don't know, creative people. And they've kind of been creating like a I don't know, applications that might increase their essentially their uh, customer use or interaction with the platform other than just stock images.
Yeah.
So they also do like they have an AI image generator, which it's not the best. Okay, I'll just say I tried it. I don't know if they gave me like the free version, like the it's not too great. But they've also done a ton of acquisitions.
Yep.
And interestingly, when they do acquisitions, let's see. I should have had this pulled up. It'd be really nice to have like a list. Oh, what's this? Maybe that list of 11 acquisitions. So, yeah, this is a pretty good one. So, the most recent one that they did was Giphy. They had Turbo Squid, and I think it's Turbo Squid the 3D like editing generation one, and they
I
have
want to say so. Yeah.
I think it
Pond
is
5.
because I think that's the one that they have been getting some like deals with like larger studios. And they have Pond 5, Flashlight. Like they've just been doing acquisitions pretty regularly. And a lot of these acquisitions are like kind of small, like anywhere from what 10 million to 50 million, something like that. From the quick glance that I did at them. I think you looked at the acquisitions as well. Were there any particular ones other than Giphy that stood out to you?
Not really. I mean, like from a company perspective, like it seems like their acquisitions are positioning the company to hopefully position themselves all right going forward. Maybe they're spreading themselves too thin, but You know, it's at least giving them a fighting chance, though, is what I'd say. And if we consider their balance sheet health, I don't know if I'm like bearing the lead here, but you know, I think they're doing okay, all things considered. Like even if you hated all these acquisitions, uh, balance sheet seems great.
Yeah, and you can kind of see the most of the acquisitions are cash based.
Yeah.
Yes, they are. Most of the acquisitions are cash based, and you can see kind of their cash balance going back to 2013. It's been pretty dang healthy. You know, for a long time it was 200
Mhm.
million plus with relatively low amounts of debt relative to their cash balance. Currently, they're sitting at about a little bit low. You know,
Mhm.
only 87 million in cash for
Yep.
a 1.5 billion-dollar company.
Yeah.
Um,
But
and their debt is basically like non-existent. I
yeah,
mean,
yeah. Then and that's where
yeah.
the nuance would be because you know that cash pile. Like some people may panic, but relative to debt, or in this case, almost lack thereof, near lack thereof. Yeah. Boy.
Yeah. No, exactly. And
Yep.
then I think if we look at their, I always forget where I have their enterprise value, but you can kind of see it in their enterprise value as well.
Mhm.
um, Over the last 10 years or so, you can see their market cap, like their enterprise value, being a decent chunk below their market cap just because of the cash that they've had on hand. And
Yeah.
we've kind of seen that cash recently erode away a bit. So,
Mhm.
specifically between about 2021 to 2023, there you can kind of see that their market cap and their enterprise value is basically equaled out now.
Yeah.
So that comes from that drawdown of cash on the balance sheet. Um, so interestingly, like we can also see that as they've done these acquisitions, they've had decent per share metric growth along with the acquisitions.
Oh yeah.
Um, from from what I've gathered, looking at the different acquisitions and also listening to various earnings calls, I think I went back to 2019.
Mhm.
Um, the uh, the acquisitions seem to be, they call them bolt-on acquisitions instead of like tuck-in
Tucking.
acquisitions.
Yeah.
So it kind of makes sense because basically what they do is they acquire a company and then a lot of times they let that company run almost individually, right?
Mhm.
Like I think Pond 5 is still ran individually, like or like kind of segmented out.
Mhm.
Same with like Giphy, Turbo Squid, or whatever they just did. Um, whatever the name of that one was. So they call them bolt-on acquisitions, and typically what it looks like they're doing is they're letting them kind of run independently, and then kind of plugging in a lot of their data sets into Shutterstock to make the content library that Shutterstock has more valuable and larger,
Yeah.
which is pretty nice. So a lot of these acquisitions have not been super, I would say, expensive,
Yeah.
especially from just the like an accounting basis of like how much you are paying for the acquiring of that company. And that kind of gets backed by the recent acquisition that they did for Giphy that just got put on the books, I think this last quarter,
Yep.
and they had to recognize like a 30 or 40 million net income gain because they underpaid for it.
Yeah.
Um, so, and for those, just for some context behind what was going on with Giphy, uh, that's Dobby, come on, buddy. Uh, what? What do you want? Oh my lord! Hey, it's okay. It's okay. The thunder's gonna go away. I promise you. I I know.
Woof.
Um, s- buddy. So Meta bought Giphy in 2021 for like it was like 300 and something million.
Yep.
Yeah, 315 or 400. And then they had some issues with UK regulators, and they ended up offloading Giphy to to
Shutterstock.
Shutterstock for 50
Yeah.
53 million, right? So
Yep.
basically, like, this says a 216 or 260 loss. I thought they acquired at 400 and they sold at 53. But so basically, Shutterstock got this thing for 25 cents on the dollar or something like that.
No.
That Meta paid.
It could be that it's the
Along,
Guardian.
yeah,
Yeah,
that's
yeah, the
true.
news source.
I
Yeah,
don't know.
yeah. I mean, not to insult the Guardian. It could be that like the UK conversions of like they bit converted to pounds
Yeah,
first,
that's what I was thinking
and
too.
yeah,
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 I heard
or
that.
they factored inflation. I don't know. Yeah. Not insulting
Inflation.
anyone, just yeah, yeah.
Yeah, yeah.
There's
So
possibilities.
TechCrunch, four hundred and
Yeah.
thirty-five. Yeah,
Yep. Yep.
yeah. So Meta buys it or Facebook buys it for 400. Um, Comes into issues with the regulation, and then has to divest or sell the asset, and they sell it for 53 million to Shutterstock. Now so when they did that, this last quarter, they had to account for like the 30 or 40 million dollar net gain for underpaying
Yep.
for the company. And when they did the acquisition, Meta, that acquisition came with a agreement with Meta that Meta would have. I don't think it was access. Well, it was access via like a longer term agreement or contract.
Mhm.
Between Meta and Shutterstock. So Shutterstock gets the asset really cheap, and then already has like a long term like potential probably small revenue source from just licensing this out to and like make sure that Meta has like access to the library. Um, Go ahead if you're
No, 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 no. I was good. No,
okay.
you're good. We're good. Yeah.
So it's pretty interesting just from that aspect of they seem to be pretty good at acquiring.
Mhm.
Like they don't doesn't seem like they're making really stupid acquisitions, and usually when they're making an acquisition, it's pretty beneficial to their bottom line numbers, right?
Mhm.
So that's been interesting for sure. Um, but at the same time, they've got a lot of potential like headwinds and tailwinds from different areas, and this is something that I've noticed. Like the market seems to be just in total disagreement about like where Shutterstock's going,
Mhm.
um, because you have like the bearish. Well, let's talk about the bearish case, I guess, for Shutterstock,
Yeah.
right?
Yeah.
So the bearish case for Shutterstock is that like AI image generation is essentially going to ruin the need for stock images from Shutterstock. And they're essentially going to uh, curb demand for their core business. And we're going to see continuing large, steady decline in Shutterstock's core business. And it's worthless trash because of that. So like the core business is in like very, very grave danger and is just going to continue kind of dying off. And we have seen a bit of a pullback, like we see paid downloads from 2022 to 2023 decrease. So it was
Mhm.
about 3 months. This is what year over year quarterly comparison.
Yeah.
43 million in 2022 to 38 million in 2023. So we do see a definite decrease on the like e-commerce side of the stock business, right? Or stock image business. Um, at the same time, we see a massive increase in subscribers,
Yep.
mostly because of I think was the Pond 5 acquisition hit in
I
that
would
time.
want to say so. Yeah.
Yeah, so we saw a big increase in subscribers, users. due to that. The subscriber revenue went up. So, and this is one thing where I need to like look into. I'm not sure if their paid downloads number is going down because their subscribers, their
They're going
like
up.
subscription revenue is
Yeah.
going up, right? Because if we look at the subscription revenue versus the paid downloads revenue, it kind of like balances out, almost
Mhm.
inverses, right? Like
Yeah.
it's about 3 mil or something like that.
Yeah.
Yeah, 3 mil versus 5 mil. So I feel like there is a little bit of carryover into the subscription or the subscriber revenue, and it's probably um, bringing down those paid downloads
Mhm.
numbers a little bit more. But I don't know if did you hear anything regarding that?
I didn't, but I did notice it. It'll be interesting going forward to see the future financial statements and comparing it to previous ones, because I want to say like we both noticed that cash inflows and gap accounting like incomes were a bit on the lumpy side here and there.
Yeah,
So like in theory, a subscription model should smooth out revenues over time. And if this company truly is transitioning more towards a subscription model, then maybe that makes cash flows more predictable. Maybe that justifies uh, re-rating of some sort by market participants as far as how they evaluate multiples or price and things. Possibly. Uh, we'll see. We'll see.
yeah.
But yeah. Just theory, I guess.
No, no, for sure. I believe I did hear in some of the quarterly calls
Mhm.
about kind of that subscription or download revenue moving to
Yeah,
subscription revenue. But I would need to pull up transcripts to make sure that I heard that correctly.
yeah.
Um, Also, we do see a decent amount of growth in their image library. So
Mhm.
their image library in 2022 was 511 million pieces of content, and right now it's 734 million. So they have a ginormous library of content, and um, yeah, so that's images and then footage clips went from
Yep.
27 million to 50 million. So now this is kind of the part. Well, let's see. What other bearish things could we say about it? Like
Oh, there's always like good number of things. I don't know.
short
You want me to?
interest, short
Oh yeah,
interest is high,
yeah,
right? So
yeah.
short interest is about like I think last time I checked is between like 10 to 14% short interest.
Mhm.
So there is definitely a decent amount of the market that thinks this thing is like trash.
Yeah.
For sure. uh and yeah, go ahead.
Okay. Did you want me to go like full list or abridged?
Dude, just whatever
All
you
right.
got.
Okay.
Go
So
for it.
red teaming this.
Yeah.
Even though like nuance would say, if you've done some digging, Shutterstock actually has partnered with OpenAI, and has their own AI services. But maybe some would say, oh well, this is just foolish because they're letting the metaphorical like fox into the henhouse. These companies are going to undercut and destroy Shutterstock long term, and run off with the bag, or this is going to be a winner take all market, and Shutterstock is just like I don't know, like an overstock maybe, like
Yeah.
STK, like floundering around, like has something will survive, but nothing worth of interest or note. But like for me, my perspective, and I think some of these you've definitely highlighted was possible C-suite concerns, and I won't steal your thunder. I'll just we'll put a pin on that. Um, I noticed that in the past, Shutterstock came under slight scrutiny with them partnering with say certain governments and like their facial recognition data type
Mhm.
things. So there's a possibility with that. Small possibility that content uploaders to Shutterstock will feel like they got a raw deal, but the fact that the uploaders have that choice to get their own residuals, I think that undercuts that possible thing. But bearish case is a bearish case is a bearish case. So maybe in the future that's something. I think those are my big broad base points with a little bit of nuance. I don't know about
Yeah.
you.
So I think I mean, the biggest bearish case that I see is just the core business
Yeah.
and um the now we'll get to the bullish case because there's a lot of
Mhm.
tailwinds with AI,
Yeah.
AI partnerships, AI image generation, and the monetization of their library and their metadata through a lot of AI partners.
Mhm.
And that's where I get really, really interested in this one. But we'll save that for more of the bullish discussion.
Yeah.
Um, so the bearish side that I see is obviously degradation long term of their core business. They were the CEO was it was founder led
Mhm.
up until about the end of 2019.
Yeah.
At that point, the founder slash CEO stepped down, and I was kind of concerned about that. I ended up going back listening through the calls. It was something that they were looking for a new CFO at the time as well, and they
Mhm.
announced the new CFO and they announced a new CEO at the same exact time. Like nobody knew
Yeah.
that the founder was going to step down essentially. Um, but when he did it, it was apparently something that had been in the works for like years.
Yeah.
Like
Oh
talked to
yeah.
the board,
Yeah.
discussed it for a very, very long time, and his reasoning was basically like, I think Shutterstock has kind of outgrown me. Like,
Mhm.
we need somebody else to come in to be able to get it to the next level. So like I I was pretty at ease with that. Um, Now the CEO from 2020, we'll just say 2020 to I think it was 2023, right?
Mhm.
Or 2022.
Uh,
I
thereabouts.
can't remember if he recently took over in 2023 or 2022.
Uh,
Um
Either way, it's pretty darn recent.
the current one.
Yeah.
But so the CEO after the founder seemed like a really good pick, and then he left after like 4 years. So 3 or 4 years. Um and to me when everything happened, I think he left for, I want to say it was just another opportunity. He left. There was a board member that had been a member of the board for like, I don't know, like 10 years or something like that. And he stepped in as CEO. The board member had previous experience at different companies as a C-suite CEO.
Mhm.
But to me, like those companies, it just didn't seem like a super like good match. And it almost seemed like a plug placeholder, even though they have never said that it was a plug placeholder until they find a new CEO. Because usually you would be like, okay, maybe they're like
Interim.
interim CEO.
Yeah. Yeah.
That would make sense, right? Um, so the selection of the current CEO, like I don't have anything against him. He hasn't done anything wrong that I can see. I just like it was like odd that that was the selection.
Yeah.
And because everything kind of happened so suddenly, it kind of felt like maybe this was just kind of like a plug variable until they found a different guy. And we'll see if that happens. I don't really know.
Yeah.
But I don't think there's a lot of confidence from the market in potentially the current like C-suite. I do like the CFO a lot.
Mhm.
Um, from what I've, heard from him and researched about him. I do like the current CFO, and he's been there since the founder, I believe, left. So um yeah, the CEO is just kind of like a point for me. Like I don't get too excited about the current CEO.
Mhm.
Also don't get too like discouraged about it. I think he's there, maybe not really steering the ship, but just kind of like, all right, guys, let's do it. Like, and letting everybody else kind of do their thing. But I don't know. I could be totally wrong. Maybe he's maybe he's driving a lot of this stuff.
Uh,
So I don't think there's a lot of confidence potentially in that position in the CEO right now.
mm,
I would also say that potentially a bearish point, other than the short interest, is that you do have constant selling from insiders. And this is a bearish point and a bullish point at the same time.
yeah.
So if we look at, let's see, let's go to insider transactions, stocks, where's NASDAQ? Let's go insider activity. We'll pull up SSTK.
Yep.
So the bullish side of this
Mhm.
is that the founder and CEO, not the founder slash previous CEO, has a buttload of ownership. I think
Yep.
insiders in total own about 31 or 32% of the company,
Mhm.
which is pretty crazy. And a lot of that ownership is from the founder currently, or
Yep.
the founder. So he owns, I want to say it's like, yeah, 11 million shares held.
Mhm.
And oh, I might be having some internet issues. So 11 million shares held, and so that's around, I want to say 20-25% of the company.
Yeah.
But he's basically been doing just automated sales. Honestly, I don't blame the guy at all. Like, no, but like, think about it. Like, you own 25% of a $1.5 billion company. You got like 300 mil tied up in this thing, like
Mhm.
400 million tied up in this thing. Like, I would want a little bit of diversification from that.
Yep.
So I think some people could point to that as being like a bearish point. And if you go back to maybe the earlier sells, you can see back in 2021, he had about 12.8 million shares. And currently he has about 11 million shares. So he's offloaded about 1.8 million shares in the last
Mhm.
2 years or so. And
Yeah.
it's just consistent. Like, I don't know if he ever buys. I don't think he does. I don't blame
What?
him. He gets stock awards still, I
Yeah.
believe,
Yep.
and options. There are some buys from other individuals, I believe, within the company that might not have as much ownership, but
Mhm.
most of them are like stock awards.
Yeah.
The director, or actually, sorry, no, here the CEO,
Yep.
the current CEO, it's almost like he made like a little token purchase when he became CEO. Like, okay,
Mhm.
guys, I got stock. um, but that's really the only direct buys that weren't stock awards over the last like year and a half or so.
Would
Um,
uh would one point of clarification for the viewers help change anything? Because the founder is still the executive chair of the board.
yes.
Yeah, yeah. So it would on some levels it would make sense that they'd still get their stock awards. It's not like oh, I'm completely out of the company. I completely provide zero value, but I'm still entitled to some awards here. Uh,
Yeah.
yeah, yeah.
No, for
So
sure.
yeah,
And yeah, no, thank you for pointing that. I should have
yeah,
pointed that out earlier.
yeah. It's all good. Yeah,
He
executive
said
chair.
executive chair, right? Yeah.
Yeah, yeah, yeah. Yeah.
So
So yep. Yep. I want to say, yeah, board of directors for under that corporate governance tab. It'll
yep.
show. Yep.
Founder, executive chairman.
Yep.
And then we have the board right here as
Yep.
well.
So, I
Or
mean, if
I
you
mean,
if you like continuity in your companies, there's an indication of continuity. If you're skeptical, um, there's a reason to be skeptical, maybe.
yeah. Well, and the other thing I would say about probably the big takeaway that I have from his ownership stake within the company is that uh he has a very, 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 very large vested interest in this company, and he doesn't want it to do anything bad. You know what I mean? Like, I really don't think I would step down as a CEO of a company when I owned 25% of it. At the
Mhm.
time, it was worth hundreds of millions of dollars. Like, I'm not going to do that if I think that's like a bad decision for the company.
Oh yeah. Oh
um
yeah.
he's going to have like a large financial interest in this company actually doing decent.
Oh
Well,
yeah.
okay.
This isn't like a
um
multi-class share setup here. This is all commons
yeah,
we're talking about.
yeah. And even though we do have a decent amount of selling uh within the various positions, we do have, I believe, uh a lot of incentive for some of the larger insiders just from the options that they actually get. So,
Mhm.
and we'll see that actually in the financials that that was like one of the things where I was like, I kind of don't like the stock based compensation on it. I was like, like I don't know how I feel about that, but it really
Mhm.
like is not super insane, right?
No.
It seems like it's I mean, last quarter was a bit higher. I think that was because of the Giphy acquisition,
Mhm.
and then probably awarding stock to those previous Giphy employees as it transferred over.
Yeah.
But all in all, the stock based compensation has actually been like pretty tame in comparison to their free cash flow, right?
Yeah.
So while I'm not like a huge fan of the stock based compensation that they're doing, when we look at the share count overall over the last 10 years, they've kept it in check pretty well,
Yeah.
right?
Yeah.
Like, we have 36.4 million shares, it looks like currently, and 10 years ago we had 34.2. So
Yeah.
like
It's
they haven't been really
Mhm.
diluting a ton at all.
Yeah.
um Go ahead, I didn't know if you had
No,
anything.
no, 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 no. I agree. I agree. That's why, like, when we've been collaborating and looking at this, I mistakenly said SBC doesn't seem that bad. In fact, they almost seem like, in some periods of time, like they're a net buybacker. Um, it doesn't necessarily show it that way, and but like we can definitely see with shares outstanding here, though. Like, it's roughly evening itself out.
Yeah,
It's
I think they've controlled it well. you
Yeah,
know
yeah, I'd say so.
I
I'd say
think they've had a really good balance, and I believe they do have, I want to say it's $100 million share repurchase approved
mhm.
currently. So,
Yeah,
and on a $1.5 billion company, like 100 million, that's actually a pretty decent amount.
yep.
um they have, I've also wondered, so this is I've also wondered if a big part of them starting up that dividend was
Mhm.
so the was influenced by the founder. Yeah, but like if he's like, oh, I've got 300 million in shares or 200 million in shares, yeah, I'll take a 2.5% dividend. Right? Because they started up their dividend, oh man, was a couple years ago, I think.
Yeah,
uh,
I think so.
and let's see, man, which one is it? Which one isn't it? Yeah, they started up in 2020. They did a one-time special dividend
Mhm.
um in 2018 of $3. So it's like, I, the more I look at this, I'm just like, okay, they actually seem like they do a pretty good job at returning capital to shareholders while also balancing SBCs, balancing dividends, one-time dividends versus like establishing a like long-term dividend. I almost wish they didn't establish a long-term dividend,
Same
and they
here.
could just do like opportunistic buybacks, and then like, oh, we got a ton of cash, we don't have any acquisitions, so we're
Yeah.
gonna pay out our shareholders 50
Mhm.
mil in a special dividend.
Yeah.
um So, but I do kind of wonder if the founder was like, yeah, we should put a dividend in there regularly just so he could start extracting some capital from it. Because the dividend now is up to about, I think it's 27 cents. Yeah. So a little bit
Yeah,
over $1 per share. So
but but like when you looked at the income statements and cash flows, like, did you think that the dividend was like the worst thing ever? That it must be put on the chopping block as soon as possible.
oh no, not at all, man.
Yeah,
I
yeah,
mean
same
the
here,
the
same here.
dividend is very reasonable. It's like a
Yeah,
19% payout ratio.
yeah,
And full
yeah.
credit to um the person that actually brought this up to me, and we were just chatting in Discord chat one day, um talking about stocks that we're looking at. Ryan Williams, he's a dividend investor, and he was
Oh,
like, oh yeah, I'm looking at blah 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 and SSTK. And I like threw them both in my model, and I like threw SSTK in it, and I was like, oh, huh,
yeah,
this is kind of interesting. And then that sent me down the like I don't know, 6-day rabbit hole of listening to what 24 conference calls, going through financials, going through acquisitions, and just being like, huh, like it just got more and more interesting as I went
yeah.
along. But yeah, so full credit to him for throwing that out there.
Don't you love it when a tech company of all things, offers a
Yeah, well,
within reason or seems reasonable of a dividend?
yeah, I don't know. It's interesting. And obviously, we can see here, like,
Hmm.
the dividend compared to their like operating cash flow is very minuscule, right?
Yeah,
Like, it's pretty
yeah,
dang small. And yeah, I mean, their debt is absolutely like nothing, right? Their operating cash flow is like almost 2x their total debt. So like interest, like they're in a very very nice position from the balance sheet, um of not having a lot of debt, being in a position to where they can opportunistically buy companies that are going to bolt on to the ecosystem that they've kind of created,
yeah.
and inject that company's IP metadata, whether that's images or audio or video, into their library.
Mhm.
And so let's get into a little bit more of the bullish side, I guess, right?
Yeah, yeah.
Um, and the bullish side would really be that, well, Shutterstock has been making agreements, partnerships, I don't know what you want to call it, agreements, whatever, with several fairly large AI players.
Yeah.
So they have one with Meta, and this is not the Giphy agreement. This is a
Mhm.
different agreement.
Yeah.
They also have one with OpenAI,
Mhm.
and essentially what they're doing is they're taking their library of all this licensed stock imagery, audio and video that they have.
Yep.
They're taking all of that, and these larger AI companies are purchasing rights to use that library for the training of their AI models.
Mhm.
Um, and that training would include like image generation, audio generation, video generation. And what makes this really valuable for these larger tech companies is that if you can seemingly grab a library of 700 million images, and all of those images already have um the gosh, it's metadata, right? Yeah, metadata.
Yeah.
I'm like
Yeah.
meta. Yeah. I was like, it's
Metaverse.
not metadata. No.
Metaverse
And
data.
but those files already have like accurate and valuable metadata attached to
Mhm.
them. So like
Yep.
think of like you have an image, right? But the AI doesn't really know what that image is. But then if you have an image and it has metadata, and it's like dog in park in spring July or like whatever, and it has all these key characteristics in the metadata of what that image actually is,
Yep.
and you do that 700 million times, you can use that metadata along with the imaging and metadata within audio and metadata within video to be able to train these AI models, right?
Yep.
And there have been lawsuits over certain AI models scraping data from sites.
Yep.
And hey, which I don't know. I have mentioned this multiple times that I think there are going to be some major issues with um, llama models, large language
Oh yeah. Yep.
models, because it's basically scraping data without permission. And I think we're going to run into like copyright issues. This is essentially that just within the visual, audio, and video context.
Yeah.
So the bull case is that these companies like Meta, Google, OpenAI, and then I think they have like, I want to say it's a total of like 20 partnerships that they're starting to license this library out to. The bull case is that essentially these AI models are always going to need to be essentially updating and learning. And so not only would you get the upfront monetary benefit from them using the library, but you might have a 5-6 year agreement. I think OpenAI, I want to say, just extended their agreement out to 6 years. I think Meta came in with a long-term agreement as well. Let's see. There's a Meta, yeah, long-standing relationship. Yep. No, I'm not sure if it says how long the agreement is, but it's basically Meta has an agreement with them to basically use their library for what we were just talking about. And then we have OpenAI just signed a new 6-year agreement with them. Yep. So I don't think this is going to be like a one-time thing.
No.
I think it's going to be a reoccurring thing where every year, Shutterstock is able to input another, I think on average, they do like 30 million pieces of content per year. And they're going to be able to license this library out over and over and over and over again. And I think there also might be some type of residual monetization off of the AI image generation that could come back to Shutterstock and the contractors or the partners, the creators, the people uploading to Shutterstock. So I think this, like, my gut tells me this has a lot more tailwinds than people think. And while the revenue for this type of agreement is pretty lumpy right now, I think it's going to smooth out eventually. I think it's lumpy because they're charging a larger upfront fee, but I think eventually it's probably going to be a more even distribution throughout the time period. And with the potential of possibly having residuals for any content that is sold that was generated with AI and was taking potential cues from Shutterstock's library for the generation of that AI image. So yeah, it's interesting.
Oh, yeah.
They have guided their latest quarter. They raised their guidance. So essentially what we're currently seeing in the company is that do I not have their latest quarter up here? Jeez, come on, Jesse. What's going on?
I
had it. I swear I had it. But their latest earnings release, they had a little downgrade, or not downgrade, but like a continuing weakening in their core business, their e-commerce side, which is basically, individuals or creators that are subscribed to Shutterstock that are using and buying the Shutterstock images to create promotional material or like graphics and stuff like that. but they are seeing increased tailwinds from the AI library demand, essentially, that they have. And because of that, they actually raised their guidance in Q or for the full 2023 year.
Yep.
And oddly, like they're not giving guidance out for 2024 yet. They're just kind of saying like, hey, we're continuing to make agreements. Like we're gonna release our guidance when we have a better understanding of what this is gonna mean for 2024. Giphy acquisition isn't going to be meaningful revenue in 2023, but they have different levers that they're going to try to pull in 2024 to increase the monetization of that acquisition in 2024. So it's kind of you got one side of the business that is potentially degrading at a really fast rate, which they argue is probably due to macroeconomic factors, and I tend to potentially agree with them.
Shrinkage.
As shrinkage, as we see slowdown and as we've seen a slowdown in growth in the ad space over the last 12 months because of people cutting back.
Mhm.
And especially some of the markets, they had a lot of tailwinds from COVID because anybody that was like, oh, I need to create a website, I need to do this, I need to do this, oh, Shutterstock, tons of tailwinds. So I think we're seeing a normalization. I don't think it's going to be a long-term degradation of that side. I think it's going to be a normalization of the e-com side and of the direct consumer side. But then you have potentially the AI model training, licensing of their library out to these larger companies that could see sustained tailwinds for I think it's going to be years. If some of these companies are making 6-year contracts with them, you don't just make a 6-year contract, right?
Yeah. Oh yeah.
Unless you're very vested in the data that company is providing you. So let's see. Yeah, so they raised their full year revenue guidance to basically a rate that would cite overall growth of 3 to 5% over the year for 2023, which is not a ton, but if I don't know, if it is where their ecom side is just slowing down and normalizing, but this is picking up, and then we could eventually get to where if the licensing side is going at the same rate and then the ecom side turns around because it was just a normalization and things are getting better and the macro is clearing up a little bit and there's more demand for new ad creation and whatnot, then we could see potentially growth in both sides of the business. And I think that would really turn a lot of the bearish arguments, a lot.
Oh yeah. Yeah.
So
let me just try and spice up the bull case here with some clickbait worthy words. Treasure pandas unite.
Treasure Fantasy Night. I don't know, man. I am very I'm super curious about this one. Kingdom, you just you don't know. You don't know what trash to pick. That's the issue.
There goes the
All
movie
right.
bud. Just throwing them
All
under
right.
there. I like
It's
this.
like the difference of being able to tell if it's blue cheese or just moldy cheese.
No, but when
No.
you take a look at the balance, every financial statement though, like for the recent history and even the most recent release, if this is trash, you know share count having been roughly the same for the past, was it 10 years?
Yeah.
Yeah, net income positive, balance sheet seems pretty solid enough. Free cash flow positive. Okay, this is trash then.
Yeah.
um,
Well, and they're guiding adjusted net income
yeah,
of 2023 of $4 per share.
yeah,
So you're basically trading at a bottom line yield multiple of 10 right now
yeah.
on an adjusted basis, though, right?
Yeah. Yeah.
Gap basis, that might be closer to 7 or so.
Mhm.
But yeah, like over the last 10 years, I mean, they have the thing that I like about them is that they haven't sacrificed profitability
Yeah.
for the their objectives of growing the business and
Mhm.
breaking into these new areas, right?
Yeah. Yeah.
And to be able to do that and do a lot of acquisitions and not dilute shareholders and keep a decent balance sheet and return capital to shareholders in decent ways, like that's like, I don't know, that's they're hitting kind of all the right boxes for me. Um so currently we can kind of see, just like we'll go over some 10-year charts, like they've had fairly steady bottom line income, obviously tailwinds in 2020, and they're kind of normalizing, but even with the normalization, the tailwinds from the AI is actually lifting the bottom line, which whoop-de-doo, great. It's what we like to see. We'll go over their margins, and we can see that they've had pretty consistent margins, around 60% for about a decade now. Bottom line margins are starting to improve, currently at about 13%. Uh, it's going to be interesting because I would imagine that like these library licensing is like very, very high margin, right? Like
Yeah. Yeah.
basically just tapping another, you know, probably like 80% gross margin revenue stream. So if that takes off, you could see a really, really nice expansion in their bottom line margins. ROI or ROA, ROC, pretty solid. Return on capital is 24%. Return on assets 12%. Bottom line yields, historically they've traded at a pretty high multiple, and right now I think they're at a PE of like 13, right? So
Oh.
their their free cash flow yield is about 8.7 or 8.8%. Their EBIT yield is 8.3%. Their net yield is 7.36%. Now those might be a little bit off because of the one-time realization of that net income that they saw in the last quarter due to the accounting for the Giphy acquisition, underpaying for that. So those might be closer to like 5 or 6%. So keep that in mind. But
Yeah.
yeah, overall, it seems pretty dang interesting. Yeah, and they're starting to, yeah, we can see they're starting to repurchase some stock now.
Yeah.
So, which,
So
hey, I can't blame them. This is in my mind, like if I was working at this company for the last decade and I saw where the valuation was and I thought we had a good, 5-10 years in front of us, like that's a good return of capital to shareholders, in my opinion. So
uh,
I can't blame them for that.
I think to spice it up though, like since we got a little derailed, this is a toll road on the internet, and it has a moat. Its library is a wide moat. Um, and if you buy this company, you get something free. I don't know, some sort of BOGO investment idea. Yeah,
You
yeah.
get
BOGO thesis is best thesis.
Oh man. Well, and it's funny because like you look at something like there's another one, um, Getty, right?
Yep. Yep.
And they have, I think, better top line. I think they have more revenue than Shutterstock, but their bottom line is absolutely like
Yeah.
horrific,
Yep.
if I remember correctly. And I think it's a fairly new company. I think the
I want.
last, yeah, man, look at that, man.
Yep.
Ooh, ooh.
I want to
Like
say they
they want to.
also had like a
I think it
focus
was a
very
SPAC, or was it
yeah,
IPO?
possibly. It was like this one was also had like a
Four
far
dollars.
more narrow like customer base is what I want to say also
Mm-hmm.
compared
Yeah,
to
no,
Shutterstock.
no, for sure,
Yeah.
definitely.
I love the comment section.
If you buy shutters are basically free.
Yep. Oh, and here's a fun question to like red team ourselves. But how much do the fundamentals matter?
I mean, if you're investing, they matter a lot.
Yeah, like it's and it's fine. Like we're not saying that you can't make money like trading. Like some people would say momentum, depending on how you define it and all that, is a really powerful approach.
People
Just
have
not for
gotten
everyone.
really rich off of
Yeah,
momentum, and they've gone broke off of
really.
momentum.
Yeah,
So
yeah, yep.
I think the turtle traders is still like a fascinating
Oh
story,
yeah,
and
yeah.
yeah, I think that's really interesting. If you guys are looking for a good read on momentum investing,
Hmm.
find the turtle traders handbook or their open book or whatever,
Yep.
and it goes through like the story of how they got started. Essentially, it's just fascinating. It's very
Yeah.
very fascinating. So.
Yep.
Um, but yeah, so I mean, yeah, fundamentals they matter a little bit. Matter a
Yeah.
little bit.
Yeah. Depending
I
on what you're
like
doing.
the shutters. The
Yeah.
shutters are basic. What if you bought Shutterstock and if you got up to like so many shares, they like sent you a like
An
pair of like
NFT?
window shutters?
No.
Like window shutters.
That would probably change the nature of inventory, the balance sheet
I'm
by a lot.
shuddering. I'm shuddering.
Yeah, dividends paid
Man.
out in shutters. Yep.
No, but so for like let's go over the valuation model real
Yeah.
quick. I mean,
All
we
right.
got a target rate 20%,
Mhm.
2.5% dividend yield. Obviously, it's absolutely destroyed, trading pretty low. Fair value yield between 3.59 and 6.69, growth between 7.14%, bottom line growth that is, and
Yep.
they I think they're in the position where they could have subdued top line growth, but they could, because of the where their growth is coming from, they could potentially have margin expansion. So I think this
Yeah.
is pretty realistic. Um,
Mhm.
you could definitely like make this horrible if you want to, just to see. Oh, what? No, I don't want to do that.
As I
Sorry.
say, that's really horrible.
That's really bad. No,
Yeah.
I want to do the scenario change of like neg like 30. So you can
Yeah.
make like the bottom end scenario like really really bad.
Mhm.
Just if you want to see like what the basically flatline growth would be on the bottom line. But for me, I kind of this -15 scenario or -10 scenario spread. I think it's pretty realistic. And yeah, to me, I feel like that's a pretty good margin of safety. And then our scenario 3 is 42.63 right there. And yeah, it's kind of current fair value would be anywhere from probably 54 to 74. Um, so I think just the market has a lot of unknowns priced into this right now.
Yeah.
I think there's a lot of unknowns, and like rightly so, like
No, it's
it's one of those
understandable
where
at
like
least.
you have to look at everything and be like, okay, like pick what side you're gonna be on or what you think is gonna happen. Um, there are a decent amount of unknowns, but it's definitely, I would say, arguably cheap right now.
It's
But
Yeah. Where else are you gonna go in YouTube finance where someone punches in negative growth for a company?
negative growth, oh, I
Yeah,
know.
yeah.
I
But
mean,
doesn't say, oh, we're just gonna plug in some arbitrary numbers for PE and there
everything
you
money would probably do negative growth for Apple.
go. And there goes another moving bus.
I'm just saying, they probably would.
Public transport's been going great right now.
So like, whatever, whatever. But yeah, man, that's kind of what I got. If you guys have any questions, hit us up in the comments real quick.
Yep.
Been a little bit light today on the comments, man. It's amazing what happens when Fuhad isn't here.
That's Oh, Dex asks, what's the desired return?
Desired return. Well, right here, I've got a target of 20% KGAR. And that doesn't include the 2.5% dividend. So basically 22.5. I mean, and I have a pretty high base KGAR and margin of safety just because I think there is a decent amount of risk here, right? This is not by no means like safe. You know, you're talking about a small company. Um,
It's not that small though. Like it's not
well, I mean,
penny
like,
stock small.
well, dude, it's like 1.5 billion market cap, right?
Yeah, yeah.
That's pretty small.
It is. It is. But
I we're
it's
almost
not
talking about a
penny
sub
stock though.
billion. No, no, but I
Yeah.
mean fundamentals are strong, right? So
Yeah.
like,
Yeah.
that's what it always comes down to.
Hmm.
But I, but the other reason that I have a pretty high KGAR for myself is that I do think this thing could be super volatile, right?
Oh
So if
yeah.
I think that there's a possibility that the volatility on something could be really really high, then I almost want to be able to um set my target rate to where I can like buy into a decent like volatile event, you know. Um, and if we look at shoot, let's just take the if we look at the 5-year chart on it, um, see
We.
we've come down a lot,
Yeah.
decent amount, down 65% from highs. Um, Max, like this thing has just kind of been everywhere. It's kind of like chopped around forever. Which is it's yeah, it's interesting. So, um, yeah, I had a brief pump from what 50 to 73, or no 50 to sorry, that was 73%, 80, something like that. But yeah, so it's looking like it's at interesting price levels to me, valuation wise. Um, I would like it. I mean, I'm always going to be greedy, so yeah, I'd like it more at like 36 or 32. Like that'd be lovely. But yeah, I don't know. We'll see. So oh wait, you want it to be 12, 13. Are you talking about the PE? Just put a PE of 12, 13, or
Yeah.
15 on
Go
it. And
PE multiple.
yeah,
Let's go price to
exactly.
revenue or price to sales.
Price to sales,
Multiple.
baby. Woo!
Yeah.
Yeah. No, no, we just need to do a comparative. Or no, never mind. That's because
Oh.
like Getty's in the gutter. But I was gonna say if Getty was mooning, we could just do a comparative to Getty
Yeah.
and be like, oh, it's so amazing.
Oh, actually, like that would be
uh
like one of the other like bearish things, I guess, is like macro headwinds, which we've danced around some. But Getty also said, "Oh, this Hollywood strike is probably gonna hit us more." Assuming that the investor presentation data that I saw is anywhere near up to date, Shutterstock is a far more diversified customer base, but depending on how they define things like media and advertisers, that could be anywhere between like roughly 20, 30-ish percent low end to like 50-ish percent, which would be a big
yeah.
hit. But even then though, like, that all things considered though, like especially when we consider the nature of the business, that's pretty good effort to diversify your customer base
Yeah. Yeah.
for what that's
And
worth.
there's the other thing, like one other thing that we could, man, I see this one is hard because there's so much going on in this thing that you could talk about this company for like 4 hours, I swear. Like
Yeah,
if you wanted to really get into like every single acquisition, like
yeah,
it would take forever. But there are some slides that kind of do a breakdown of where they're going as far as their uh revenue by geography, and then I think
yeah.
they also had subscriber based revenue as well, so we can
Oh yeah,
see that like their kind of revenue breakdown here between e-commerce and uh enterprise. And let's see, so enterprise is about 40%, e-commerce is about 61%, and I think we're going to see enterprise continue to build up more and
mhm,
take more and more of that chunk. um There was a decent amount of, let's see, I think they saw a decent amount of fall off in Europe, which kind of
yeah,
makes sense because Europe's kind of been affected a little bit more
yeah,
recent macro standpoint. So, but if Europe's just the start and then that bleeds over to North America and then they see it in North America, like that could be pretty rough.
Yeah.
Their where's the breakdown of their subscriptions? Oh, there we go. So 27% subscription revenue for their enterprise and 52% subscription revenue for e-commerce.
Yeah.
And let's see, they also had, I believe, like a before and after of like over the last 4 or 5 years of how that subscription revenue breakdown has changed, and they are converting more users to subscription based plans, so that's pretty nice to see. But let's see if I can search it real fast. There we go. A 2018 mix to 2022 mix. So we do see a nice like increase in the subscription revenue versus non-subscription over the last 5 years.
Yep.
And it's continuing to increase as well. So yeah, it's an interesting one. We could talk about it all day, I'm sure, but I think it's probably time to call it. But oh man, thanks for joining me again, Bacon. It's fun. This one's this one's an interesting one. I'm still like, I don't know, but I think it's gonna be a fun one to follow, just to see what happens. And yeah, if you guys are interested, you can check out more of it. You could spend probably weeks on this thing, going through the different business lines. But you got any final words, Bacon?
Thanks for having me. I hope you and the viewers thought we did a great job. Be sure to like, comment, and subscribe. And and the disclaimer. We're just two guys
None of
chopping
this.
it up.
None of this is financial advice. We are just two people talking on YouTube about a random stock.
Yep.
We are not suggesting you buy or sell anything. Always seek professional opinion before doing anything like that. So have a great day. I'll catch you later. And for people in my Discord, we might have some changes coming. I'm pretty excited. I got some.
Oh my gosh!
I got some irons in the fire. Regarding a couple different things over the next week or two. So we'll see what happens. I'm pretty excited for it, though. I think you guys will enjoy it as well.
All right.
And
damn it!
What?
I wanted to pump the brakes here because like Cryptic is perfectly